Welcome to Markets Now. I'm Michelle Rook along with Allison Thompson with the Money Farm. A lot of red on the board this morning. A few exceptions and feeders, and I think we still have hard red winter wheat up a little bit. But Allison, let's talk about the corn market to start off with. We actually made some new lows for the move yesterday, and the funds have been kind of on the sell side. Do you think maybe we've got a line in the sand here? Can we hold corn above that $5 mark on the December or not?
Gal, I sure hope so. It was an ugly overnight trade. We got below $5. Wasn't very pretty there, but right now we're trading right around that $5 area. So if we can close above it today, it would definitely be a positive sign. But the market just doesn't have a whole lot of fresh news. And on top of that, we saw China cancel some more corn today. So demand news isn't there, unfortunately, and we see that with front month. July still down 16 cents, made new lows on the overnight too. We just don't have any fresh fundamental news to support the market higher, unfortunately. And with the funds being short, they kind of have been ruling this market. So we need something to change. And I have a feeling when it does, we could see definitely a knee-jerk reaction to the upside when it does.
Absolutely. And you mentioned the July corn being down, obviously, the China cancellation part of that, but it almost felt like the market knew this yesterday, this news.
Yeah, I have a feeling there was some rumors going around as well. And to be honest with you, it didn't surprise us this morning to see that, given the action we've seen over the past couple of days in that contract.
What about soybeans? Boy, it was a wicked day yesterday, especially in the soybean oil market. There again, do you think that we can hold November soybeans above this $12 mark?
Well, so far we are today, which is a good thing. But honestly, that whole complex has been pressured lower. And soybeans have had a hard time gaining ground on their own without seeing some of those other byproduct markets turn up as well. So until we see them make a move higher, it's going to be hard for soybeans to gain a lot of ground. But at least what we're seeing today, we are seeing those deferred contracts showing a lot less gains. And maybe we can trade positive by the end of the day. Trading to some new lows there on the overnight doesn't necessarily look good, but if we can close back above $12 would definitely be a good thing. And then looking at the front month contract, we did actually fill that gap on the overnight that was left from last July. So that's a positive. So as long as we hold some of these bottoms here around that 1355 area, maybe we can turn this thing around.
So I'm glad you mentioned that gap area. I was going to ask you about that, and that was obviously a technical objective. So maybe that'll be our support area. We've had this risk off going on with the debt ceiling talks, but it looks like maybe outside markets are kind of reflecting the idea that maybe they're going to get something done, or at least there's hope of that, or not.
Yeah, that's the talk the last couple of days, is that hopefully by the end of the week we'll have some kind of agreement in place that we can move forward with that. And that definitely has outside markets up. Stocks are higher, the dollar's higher today. So definitely giving us a positive outlook on that front too. And grains and livestock maybe are feeding off of that. They kind of pick and choose which days they want to follow outside markets, but today might be one of those days, especially when we only have 2 days left before the end of the week. And on top of that, also going into the end of the week, another big story worth watching is going to be that Black Sea export corridor that does expire tomorrow. So we should be hearing some kind of news with that. I know there were some rumors back and forth here this week on what's going to actually happen, but we should know more tomorrow. So maybe taking on some risk here ahead of that.
So, Allison, we did get some confirmation this morning that the Black Sea Grain Initiative is going to be extended. And how long?
Well, that's the $1 million question. Some early reports are saying for 2 months. That's a good thing. That's more than we had this last time. So I guess there's still a lot of unknowns here at play. Markets are reacting to it, taking some of our early gains away. But again, Turkey was the one who confirmed the news. So we'll see what Russia and Ukraine come out with here later today to confirm those. But again, a good thing to see. I guess, to be honest with you, ahead of this, we were wouldn't have been surprised with any outcome, given the rumors we've heard back and forth here over the past couple months since all this started a year ago. It really wouldn't have surprised us to see it go either way. But to see the deal extended is definitely a good thing. Keeps that market open. But again, still a lot of unknowns here moving forward. We'll see how long it actually is going to remain in place, and what they're if they're going to continue to ship corn and wheat, and where all those destinations continue to go.
Did you feel like we had a lot of war premium built into this market? I mean, is there a lot to take out here or not?
I don't believe so. Maybe to some extent, but to be honest with you, I do feel that at least Minneapolis and Kansas City are trading on their own fundamentals at this point as well. So I think that's going to maintain some of our prices. I don't think we're going to fall out of bed here today either. We've taken out a lot of war premium, to be honest with you, across the board. So we are at pre-war levels, to be honest with you, especially on the corn side, and wheat for that matter. So I think that the fundamentals do remain strong enough. I think we'll be able to maintain levels here.
And that has played into the wheat market especially, but also we're trading the results out of the first day of the Kansas wheat crop tour, and certainly those were some of the lowest I think they've ever had on that first day, weren't they?
Yeah, I was actually looking that up here this morning. The day one, which covered the northern part of Kansas, came in at 29.8 bushels per acre. So, and that's the lowest reading they've had since 2003. So it's definitely a short crop. I think it finally gave the market some confirmation of that. We've kind of all been saying it. The farmers knew it, but the trade just hadn't grasped onto it yet. So it's really good to see some of that confirmation, and we'll probably likely see that crop get smaller. So obviously problems here in the U.S., but we're also seeing the Canadian issues start to catch the market's attention as well. They've had a lot of drought areas in a lot of their wheat growing areas as well, for both winter wheat and spring wheat. So unless we see their conditions change, they haven't yet. They missed out on a lot of the rains we saw in North Dakota over the weekend. So with that being the case, we could see production fall in North America quite substantially here between us and Canada come the end of the year if we don't see conditions change.
What are you thinking about spring wheat acres? What's not going to get planted in North Dakota at this point, do you think?
Yeah, well, right here in my immediate area in the Red River Valley, a lot of guys are finishing up with corn and wheat right now. So I think what they're sticking to is basically rotational needs at this point. I'm not seeing anybody else putting in extra acres of wheat. So I don't know if we'll necessarily get all those acres planted that are currently estimates. I know some guys were kind of adjusting some of those rotations down as planting progressed. But in North Dakota too, there are some delays there. Some of these guys in further western counties up by the Canadian border did actually receive inches of rain this last weekend, which has really put their planting progress at a standstill for right now. So with that, with planting being slow, we got confirmation of that this last week with planting progress, especially for corn as well for North Dakota, only 5% complete. And North Dakota is supposed to see an 800,000 acre increase to corn acres this year. And I have a hard time believing that's going to happen when we're seeing planting dates less than 10 days away in some areas. So unless we see conditions dramatically change, I have a hard time believing it. Even today, we are seeing a good chance of rain throughout the state. So depending on how much we get, it just seems less and less likely. So with that, if North Dakota doesn't get all those acres planted, or it goes to PP, because there is some incentive there this year, that we might see the national yield be higher, but again, we're going to be working with less acres. So it'll be really interesting to see how that all plays out here in the end. But again, this is all kind of speculation at this point in the market, but we'll know more in a couple weeks for sure.
Yeah, but like you said, there's more incentive to take prevented plant this year than there was last year for sure. All right, livestock markets, a lot of red over there, except for feeders, obviously, with the pullback in the corn market. But, as far as cattle, do you feel like we're just going to consolidate here until we get cash direction? And then we have a cattle on feed report coming up here this Friday as well.
Right. Yeah. I think we'll probably just see some ebb and flow, as we call it in the live cattle. I don't think we're going to see any big movements, but the feeders, on the other hand, are definitely taking on these lower corn prices, and we are seeing highs there. So seeing contract highs are definitely could be in the future here for feeders going forward. And then, of course, lean hogs too. They've had a couple of good days here, so seeing a pullback today isn't too surprising.
Thanks for joining us, Allison Thompson with the Money Farm. That's Markets Now.